Hello, everyone, and this is Reggie Williams, and I'm here with another stock talk. With this week being crazy, we Tesla's will be added into the S&P 500 on Monday. We've got a short week because it's Christmas. The market will be closed on Friday. We'll have a half day on Thursdays. The market closing at 1 p.m. Eastern time. We also have we still got the president elect. This is news that's going to affect the stocks that we're going to be trading. So we're changing presidents right now. We have a COVID vaccine out, and we have Congress. Look like they're going to pass a bill, hopefully this week, about COVID relief. So and Americans are getting checks, which is good for the stock market because last time it brought so much liquidity to the market, it was crazy. And the combination of the checks and time off. And so seeing that it's Christmas break, people have time off to be in front of their computers to trade. So I think it should be some liquidity this week. I was a little concerned with that. The market may be flat, but it's too much going on for it to be flat. So anyway, I want to talk about a stock play that you should have in your portfolio that may be a future anchor stock. And also, I'm doing videos all day about stocks that'll be good to trade this week. I'm not gonna do it in one video because the video will just be hours long. But don't forget to like and subscribe so you get notifications on other stocks I'll be talking about that'll be good to trade this week. So I decided to break them in different videos. I think it's better that way. So you don't have to cruise through and try to find what you're looking for. So anyway, this particular stock you want to play, and this is a good options play. I trade for income, so I do swing trading. So I'll trade for I'll hold a contract for a day, a week, a month. Just depends on what the charts tell me and the profitability involved. So anyway, Lindy is if you Jim Cramer talked about on Mad Money, and it's been all over. It's been all over the place. And Lindy is a play on hydrogen, using water to power things, right? So crazy, right? Another thing, they said water is being traded in the futures market. The first thing you're thinking, like, trading water, because you trade copper, you trade wheat, futures, commodities. And the reason you think about it is because of hydrogen. Hydrogen is awesome because okay, so we're switching to EVs, right? So like everything is going to switch over to electric vehicles and the batteries, and there's going to be all types of different uses for that too outside of automobiles. Automobiles is just an entry point for the technology. And so what's going to compete with EVs will be hydrogen, right? Hydrogen powered vehicles and hydrogen energy. And so what this energy is going to do is there are places in the world that don't have electrical grids. There are places where people are off the grid. There are places where they just don't use electricity. And one place I think of off the top of my head, man, is North Korea. They don't fossil fuels. I guess because they're kind of blocked off from the rest of the world. But I'm sure there's places in Africa and in other countries, places in China, like the very rural places, where hydrogen energy may be a good choice for a company to set up, right? So anyway, not to get too deep into that, but I see a purpose for it, and I see it being a direct competitor of electric. And remember, anything that was new, that was up and coming, what we thought it was going to be ended up being something else. Uh, Case in point, I would say video calling, right? Like Zoom. Remember a little technology called Skype? Remember Skype? Now, wouldn't you think Skype would be the Zoom of today? I think the millennials don't even know what Skype is. Skype was video calling. We had internet, we had your phone, and we had your laptop or desktop, and you would Skype people. And Skype, I mean, be honest with you, not probably like 10 years ago, people were still Skyping, and I don't know what happened. I mean, I haven't done a research on it, but Skype is. You don't hear anybody talking about Skype. You think Skype will be on your phone? You think Skype will be the Zoom? But I guess it didn't work out that way. They It didn't work out that way. So you think they've been bought out? Maybe they were bought out and they're not. I don't know, but things never turn out the way you think that they do, right? We were thought when we said video again, even when we're going along the Skype route, video calling. When we had landline telephones, we were thought that it'd be just they had these things where there's a monitor on a regular phone, and people that's where it started, right? But we didn't think that would transition to cell phones. So anyway, we never know where things will go, and hydrogen is a good play. And let's dig into Lindy. This is the website. 28 billion in sales. They're bragging on the front page. They are a multinational company. They have their eggs, as with most successful companies, their eggs are not in one basket. But they do industrial gases and they're in healthcare and manufacturing. Like it's so many places you can go with this technology, and they're in it, right? So got a rich guy on the cover. I'm sure that's the CEO, and so that's Lindy, and this is how we're going to play it. Oh, let's go back to the technical analysis. Getting ahead of myself. Technical analysis. So this is the monthly, excuse me, on Lindy. And the monthly charts is our candlesticks, and we're trading in an upward range, an upward column. Let's break it down into the daily. So right now, our daily chart is showing the end of a downtrend. Right, we had this bit of a flag pattern here, and let me show you. And with a flag pattern, you basically get higher highs, lower lows, and it just consolidates down. And when it's consolidating down, it um, it forms a flag pattern. So let's draw some lines. So this is the beginning of it. This is called the pole, and this is the flag. And some will also call this the pennant sometimes if it bounces up and down within a small a tunnel. So anyway, this is our flag pattern, and it looks like we're on the top of it now. It looks like we got a bit of a breakout going on already. And with this breakout, this is where we're at here. This was on Friday, and we've got huge volume spike. So that's kind of confirmation. Sometimes you see the volume spike and you see the move up. We got two candlesticks that confirmed because we have one. It could easily go up here and then fall back down. But we have two. Usually you want three, but because we're going to hit a little resistance here at the 260 mark, and we don't know if it's going to bounce or break through. And so we've got good volume, so that's going to help. Like this is the biggest volume it's had in months. So we have a huge volume spike, so that's confirmation because you have institutional investors, guys like me, who look at chart patterns and say, "Ooh, this is a good entry." And so, but you wait to see how you see they waited for confirmation. They waited for that. They waited for that second. You're gonna take a shot. Take a shot on that second candlestick. Second candlestick. All right. So another thing you can do for confirmation is look at the options, right? And our options chain show we have open interest. Open interest is like the number of contracts that are out there, people who are playing the option, who's playing that contract. If you don't know what options is, you don't know what contracts are, you'll be a little lost here, but I recommend writing down keywords and doing some homework on them. And so we have open interest and then volume. Volume is the place that people who the exchange from buyers and sellers, people that's been moving their positions. So the fact that the volume is low is good because that means these 2,400 people bought and they're holding, right? They're not trading it. And so we're holding, and it's coincidentally we're holding at the 270 mark. And let's look back at our chart. And according to the lines I've drawn, we've got okay. This is our first resistance is going to be at 260, but that we're gonna have to break that to even have a breakout. So after 260, then it's gonna break up. And it's gonna be a fast move, probably up to 270. We got 269 as our resistance here, and coincidentally, it's the same thing everyone else is thinking. Because look, at 270, you have over 2,000 contracts for January 15th. So I believe we should get there before January 15th. There's plenty of time. Also, our SIR indicator, this dot here, is showing confirmation of an uptrend. Our MacD right here, excuse me, our RSI is showing uptrend. It's showing more buying in the market. And our MacD here is starting a golden cross where it's crossing over into an uptrend. You look at this pattern here, green is up, red is down, and now we're crossing over into green territory, starting an uptrend. So how are we going to trade this? How am I trading this? How I'm trading it is I'm going to the 260. So now, if you can do it, if you want to do the 260, $260 for one contract. Excuse me, $260, $620 for one contract. Let's go to the options profit calculator to see what that looks like. So we put in here, so that's Lindy's ticker symbol, and we're doing the January 15th, 260 strike price call option. It's going to cost us $260. And if it hits our target, and let's say it takes, for some reason, it takes all the way to June 15th, we've made $580 net. That's after expenses and everything. So that's money in your pocket. $580 if it takes that long. If it goes up higher than that, these are the numbers that'll do, I mean, like $2 grand. See, and I usually don't trade single options. 90% of the time, I'm trading debit spreads, and then another small percentage of the time, I'll do a credit. If I'm really confident on the uptrend, I'll do a credit spread if I can catch it low enough. And this one, I would actually do just a single option because it's a low volatility option. And the reason why you know that is because look how flat this is. This is the theta burn is almost non-existent. Like it would have to stay. Your break even on January 15th is 268. It got to move $10. So you have almost a month for that thing to move $10, and I believe it will. It's a you know it's being pulled up by the hype with EV and hydrogen. Is just people are just now addressing that. And so we got EVs that's setting that's paving the road for us. Hydrogen is right behind it, following its footsteps. And just hasn't got as popular yet. So this is a nice ground floor opportunity. So if you bet 260, if you risk 260, $620, excuse me, you have huge returns on this movement. And again, if it gets to 270, if it gets to 280, if it gets to 280, you're in a 4-digit range. No matter what, you're in 4 digits. So that's how I'm playing that. I mean, of course, if it takes a turn for the worse, right? Comes down here. Even if it turns for the worse now, you got plenty of time for it to recorrect. You got a lot of time to be right. And if it comes back up, so you can take those dips up when you have low volatility options. So that's if you want to risk $600. If you do not, there are other options, right? That's what it's called, options. So we have, let's go back to the options chain. Look at that. It's a huge difference because there's a $10 gap in the options you can buy. So if you go up to 270, right, which is our strike price, which is a lot of people opted to do, I think a lot of these people have probably bought two. Instead of buying the 620, they bought two. And let's see what that looks like. Okay, let's get into details and see. So our theta, that's what we want to check, our theta on this. That's not showing me theta. All right, E-Trade's being picky right now. Okay, so let's try the cheaper route and see the budget friendly. And I don't believe it was not 115. Let's redo that. That's 180. Oh, it's too far. It's 265. So if you do the 265, oh, let me calculate it. 285, I guess. Oh, that's what I think said 265. All right, 285. And you got a little bit. Look, the theta is a little worse on this one for some reason. But you have until 272 to break even. So if it's at 272 on January 15th, you've made $100, right? But if it hits it before then, see, the time is not your friend because of theta burn. So the sooner you hit the 270, the sooner you want to sell that thing. I would definitely by the end of the month. If it doesn't hit it by the end of the month, just let it ride out because you may have low volatility days uh, until after the first when people start getting back to work. The holidays is over. People back home. They're thinking about putting their money in stocks. Also, you've got hedge funds rebalancing their books, so it's gonna be a weird week. So anyway, yeah, you got to look at all this profit potential you have with Lindy. So it's definitely a good hydrogen play. If you go long, there's a lot of potential. If you get to the point where it's gapping up, you want it for a little longer, you can always roll the option until the next month. So that's where we're at on Lindy, man. Hydrogen play on Lindy. Catch my next video. I'm gonna do a video on earnings this week on CarMax and the option play and how I'm gonna play that. So this is where we're at on Lindy, and for some reason, if things go for the worse, I'll be cautious if it breaks past 255. If it breaks down here, because this will be the next support here at 253. But we're in a reversal, so I don't see that happening. But you never know. Again, one thing, no matter how much experience you have, no matter who you are, nobody has the right to tell a stock which way to go. If you did, that would be illegal. So anyway, all we can do is dictate through technical analysis. This is Reggie with Stock Talk, and this is my review of Lindy. Watch my other videos on stocks for this week, this trading week of December. And Merry Christmas to you guys, and I will see you on the next video. Don't forget to like and subscribe so you can get my next video.